We are joined today at Active ETFs in Focus by Bill Thomas, who is the CEO of Grail Advisors. Grail currently has 7 actively managed ETFs on the market, and just recently announced a partnership with DoubleLine Capital, which is led by the renowned fixed income manager Jeffery Gundlach. Bill, welcome to Active ETFs in Focus.
Thank you for having me.
So, to start out off, since the last time we chatted, the active ETF space has actually changed a lot. How do you think the prospects of this space in the U.S. have been evolving?
I think we are just on the forefront of this thing really taking off. There's about $1 billion in actively managed ETFs, and that all really started just about over a year ago in May with the launch of the American Beacon product in partnership with us. And I think you're seeing more and more firms get into it, and I think we're just at the beginning of the first inning, to use a baseball term, and very, very exciting.
Yeah. Now, do you think, aside from some of PIMCO's ETF, most of the active ETFs have seen a stagnation in their asset base? Do you think that's a sign that there's some sort of poor traction for these products in the market?
I think it's been a very difficult investing market. I mean, the market today was off significant with the downfall. So I think it's a challenging market to put any product up into the market.
Yeah.
But I think what you're seeing is that if you've got the right product and the right strategy, you're able to gather assets. The PIMCO Mint is a perfect example of that. You're in a low yield environment where investors are looking for a little extra return, willing to accept the fluctuation of limited fluctuation of the net asset value, and that they're starting to really focus on that transparency and liquidity and tax efficiency are major investor points that are of interest.
That's interesting. Now, the recently announced partnership with DoubleLine, is that a really big win for the company?
It's a huge win. And especially that win with Jeffery Gundlach and his team that have come over from their previous employers, really just fantastic. And that is, they are the fastest growing money manager in the States. They have just surpassed $1 billion on their total return mutual fund. They announced on Friday.
Yeah.
I mean, there's just tremendous amount of momentum and a tremendous amount of excitement about what they're doing. So I think coupled with DoubleLine, and then the news that we had about a month ago with Western Asset Management,
correct,
what we're seeing is truly the real brand players are coming into this space and doing so with utilizing the platform that we've built at Grail Advisors.
That's great. Now, on a separate note, how big of an issue do you think is the daily disclosure requirement for new issuers or prospective issuers who are trying to enter the active ETF space?
It's been interesting to see how different firms deal with this, and what I find is that this is really a cultural decision of the investment management firm. And you've got certain firms that really see this as a non-starter. If I need to be fully transparent, I'm not going to do it.
Yeah.
And what you're seeing is other firms have comfort in doing it, and those firms probably participate in managed account programs and separate account wrap programs, and that they see the opportunity while other firms struggle with that decision to really get into the business and get in there and gather assets and with the belief that eventually we're all going to get there anyway. And that's where I think the first mover advantage is significant.
Now, given what you just said, do you think there's ways in which the active ETF structure could be improved in the U.S.?
I think that the SEC has done an incredible job getting us to this point. And I think that, given everything and the creative ideas that, get thrown in front of them on a daily basis, I think what's neat is that we've got a wonderful structure that's working today, has operated efficiently, and I think it's to the end benefit of the shareholders, which is their job to protect and our job to deliver to, that transparency is truly a wonderful benefit for them.
But I guess the other side of the story would be if, because of the transparency, the managers end up losing some of their edge, then ultimately the shareholders at the end of the line also end up losing in some way?
Well, I don't think I've never seen homework that actually said that having a fully transparent portfolio is to the disadvantage of shareholders. With that said, I've never seen research that said fully transparent is to the advantage of shareholders. That's where I truly think it's a cultural issue between the firms, and I think that certain firms have made that leap into the managed account space or into the model programs, so it's a natural step to make that next step in the actively managed ETFs.
Okay, that's interesting. So are you seeing greater openness on the prospect of converting mutual funds into actively managed ETFs?
Yes. So we'll probably be announcing within a month a conversion of a separate account manager who's going to convert their program into an ETF. You'll probably see a closed-end fund do it as well. And then we've been working with several mutual funds that are looking to do it, and they certainly want to get there first because they see the benefit of being an innovator's hat on. So we expect to get something done here probably within, to announce and file and get something out the door, at some point in the third quarter.
Okay. Now, how can these products, active ETFs, how can they become a more integral part of advisor portfolios given the current incentives that advisors have to recommend mutual funds instead?
Well, I think that the mutual fund industry has really moved away from selling their products load at load. If you look at the business, A shares, probably 80+% of A shares are actually sold without a load at net asset value. And I think what you're seeing is everybody's moving to these fee-based wrap accounts where the broker is getting compensated on the overall portfolio, not on the product. Now, ETFs fit perfectly in that spot because it's a low-cost way to get access to those particular strategies, certainly on the passive side, now emerging on the active side. So I think that the model has changed, and ETFs actually feed perfectly into the new model.
Okay. What would you say are the main challenges in the active ETF space, let's say for the next 2 years?
I think it's to continue to educate investors and advisors. And, if I could rewind the clock 2 years ago from when we started Grail Advisors, I think that I knew education was important, but I thought given the resources that a lot of our other fellow firms in the ETF space have put into it, I thought that the education they'd done was superb, and everybody would know what an ETF is, regardless whether it was active or passive. I've been surprised that that's not the case, and so I think we all need to continue to focus on education. Certainly it's a core issue for us. How do you trade ETFs? How do you utilize ETFs? And again, that's regardless of whether it's active or passive.
That's fantastic, Bill. Thanks a lot for sharing your thoughts.
Thank you for having me.